Good morning, everyone, and welcome to my morning report chart appraisals on Friday, the 18th of May, with me, Richard Perry, market analyst at Hantec Markets. Pretty mixed start, not a great deal of direction on markets. They're fairly cautious as the trade talks between the US and China have sort of started to get going, and there's a sort of little bit of give and take on either side, seemingly. But Donald Trump suggested yesterday that he was a little bit uncertain as to whether there would be any success in the talks, and markets fell away a touch into the close yesterday, with the S&P 500 down 0.1%, and you've seen that sort of drifting into the European session today, that sort of slightly cautious sentiment. Nothing massive in terms of direction though, and you can still see that the dollar, which had its strong gains on Tuesday, continues to sort of consolidate those gains really, as Treasury yields have sort of held up above that breakout level, above 3.1%, and on the 10-year, and the 2 years just dropped back a touch, so the yield spread is actually widening again, which helps to steepen the curve. So the dollar is sort of held up on the back of that a little bit, I suppose. Markets yesterday on the Wall Street indices just sort of stabilised a touch, but interestingly enough, let me show you one chart that the markets will be still looking out for, which is the Italian yields, which are still pushing higher as the market continues to sort of weigh up the implications of these these populist parties gaining coalition government in Italy, and how that affects on the yield spreads of the core periphery in Europe. Look at this, this is German versus Italian 10 years. It's widened significantly in the last sort of few days and couple of weeks, I suppose, as that Italian yield has spiked, sort of moved strongly higher. Now, in terms of data points today, not a great deal really. It's a pretty quiet end to the week. Yeah, you've got a little bit of Eurozone today, a little bit of trade data for the Eurozone. Expected at 10 o'clock. The trade balance, which is expected to be at 20.7 billion euros. But Canadian inflation at 130 could certainly have an impact on the Canadian dollar. 2.3 is the expected inflation there for the headline, but yeah, nothing too significant in terms of economic announcements today. My chart today is Euro Sterling, however. Now, Euro has been just drifting lower, coming under a little bit of pressure, as Sterling has also started to find a bit of support in recent days, and that has helped to drag Euro Sterling back lower. This I suppose you could call it an uptrend channel of higher lows and higher highs in recent weeks on Euro Sterling has now been broken by that move to the downside yesterday, breaking below that 87.25 support yesterday. Now, sort of, you look at the momentum indicators, which are also sort of rolling over that crossover sell signal on the MACD lines. RSI falling back below 50, but also the stochastics. Look at that head and shoulders top on the stochastics, certainly suggesting this sort of the momentum in this recovery higher has now been shifted back to the downside again. You've got this downtrend that is in play on Euro Sterling in the last couple of months, and it would suggest that with all the moving averages sort of rolling over as well and falling in pretty much bearish sequence now, this could be a rally that now finds it difficult to really sort of gain traction to the upside, and I think it could start to form a run of lower highs. So you'd be looking at using this as a chance to sell. Now, on the hourly chart, you can see that there is a sort of a pivot, I suppose you could say, over throughout May, whereby this old support of 87.60 has become a basis of resistance now, 87.80 as well. Old lows become new highs. So we've got that in place now. So 87.60 to 87.80, bit of an overhead supply area, and sort of as this unwinds on the hourly chart, you could start to see that stumbling and potentially starting to roll over again. So where does that leave us on the daily chart? Well, 87.60 seems to again be a bit of an old level that the market has looked at in previous months. So 87.60 to 87.80, maybe an area where you can start to think about a selling opportunity once more. So it's those momentum indicators that really get me a little bit concerned about how far that euro rally is going to get against sterling. And certainly in the last week or so, sterling has strengthened. It certainly does seem to have changed the sentiment on euro sterling back to the downside once more. So with that in mind, I wish you good luck in your trading, and I will speak to you later.